Hello, hello. Want to say welcome. So appreciate our connection. This is Lauren Fogelman with Business Success Solution, showing accounting professionals how to double their income working half the time. And we are going to talk about a hot topic today, is about the pricing part of it. How do you know if you are undercharging, and what is that you can possibly do about that? So let's kind of go into what are some of the things that are signs you are undercharging. And if you want to share those with me below, then you are absolutely welcome to add in something maybe that I overlooked. But I want to give you some of the top 5 signs that maybe you are undercharging for your services. The very first thing is you have a low profit margin. In fact, if you really looked at some of your clients and look at the biggest paying clients that you're doing the most for, are they even in the black? Sometimes you find out that they are in the red. And that is something to think about. Maybe they are paying your biggest fees each month, but what you're doing isn't really profitable. Or if you have someone on your team working on a client's books and they happen to be very, very slow, it might be that you have a really low profit margin because of the fact that you have someone that may be doing good work, but they're really slow at what they're doing. So definitely want to check your profit margin for clues that you're undercharging for your services. Number 2 is your paycheck. Are you paying yourself enough for the amount of work that you're doing and the value that you deliver? That is a great indicator that if you haven't given yourself a raise in years, that you're barely making ends meet, or even if you have payroll runs, and payroll runs are really, really difficult as far as money goes and cash flow, then that is something to consider as a sign that you're undercharging. Number 3 is when you're talking with potential new clients about engaging your services, or maybe even talking with a current client about a project. Everybody says yes to you. You get a yes 100% of the time. And if that is happening, then absolutely. That's one of the indicators that I look for when talking with bookkeepers, tax preparers, accountants, is if everybody's saying a yes to you, then your rates are absolutely too low. Number 4 is that there isn't enough time for all the work that you have to do. You have a factory model business where you have to keep on cranking it out. You have so much work that your life beyond work is non-existent. Quality life, when did that go away? So think about that. Do you have quality life outside of work? And if you feel that if you cut back on the work hours, then it also affects your bank account and your revenues. One more sign you're undercharging. And then number 5 is burnout and resentment. You are exhausted. You wonder how you can keep on doing this. Is it sustainable? You get resentful when your clients are paying you low fees and you're delivering high quality work, or you see them going on vacations and they are contributing to their 401k, and then they go ahead and question your invoices. So those are the 5 signs that you might be undercharging: is low profit margin, your paycheck, everybody says yes to you, not enough hours to do all the work, your quality of life has suffered, and then there's burnout and adjustment. So how do you go ahead and fix this? Well, there's a couple of different things that you could do. One is you go ahead and you only adjust your rates for new clients. All your new clients get your new fees. Legacy clients remain flat and stagnant. Another thing that you can do is keep your fees where they are, but reduce the scope of work that you're doing for that particular rate. And the third option is to raise your rates with all clients, new as well as legacy clients. So those are the 3 ways to be able to start thinking about fixing this. And if this feels like it's uncomfortable for you, a stretch, totally get it. It is like that for everybody. What I want you to do, if you're looking to start raising your fees, but you're feeling a little bit concerned about that, then start following what I call the good, better, best pricing model. And I have a resource for that as well. If you want to let me know below, I will go ahead and share that resource on the steps to follow the good, better, best pricing model. But think about, this is the way of easing away from a fixed or hourly rate that's much too low into pricing that is more reflective of the value of what you offer. So you first have people coming to you, come up with your new rate of what you would typically charge them. Now we go ahead and multiply it by 1.5. This is your new good rate. We want to enroll 3 people at your new good rate. After you've done that, you got some evidence people aren't quite as price sensitive as you thought they were. We'll jump up to tier 2 after you enroll those 3 people. Tier 2 is your better pricing. Once again, people come to you, go ahead and come up with that original fixed fee you would have quoted them. And now we're going to have your new better rate, which is multiplying it by 2x. With that, you're going to start getting people saying yes. You're going to realize that you're working with a better quality client and you're now earning double what you previously were earning. No additional time spent working. After you enroll 3 people at your new better rate, we go to the top tier, which is your new best rate. Come up with your proposal that you originally would have charged for people coming to you. And now we're going to go ahead and give it your new best rate, which is multiplying it by 3x. Yes, it is possible to earn 3 times more than what you're originally charging. You're getting better at these conversations of being able to talk about what is of value to the client instead of what is of value to you. You might hear what some of their concerns are, and you're better at being able to answer those concerns as well. And you realize you are now working with dream clients. You don't need as many clients in order to meet your revenue needs. So that is the way to start to move forward with the good, better, best pricing. If that appeals to you, once again, let me know below that you're interested in that. I will share that resource with you. And this is what happens when you start to charge fees that reflect your value. The very first thing is that you have better clients that are not price sensitive. They are not challenge you for your invoice. The next thing is that your rates are a win-win for them as well as you. Everybody is happy with the fees that you're getting paid for the services that you're delivering. And the third part, as I mentioned just a moment ago, is that you don't need as many clients to meet your revenue needs. This means that you can work more closely with a client, doing deeper advisory work and consulting with them, take on another project a month, or possibly just get back some of your free time to be able to take care of you. Because when you take care of you, you take better care of your clients as well. So those are some of the things to think about as far as the 5 signs of undercharging. If I missed one, please let me know below and what to do about it. If you want the resource that shows you how to move forward with raising your fees with the good, better, best pricing model, it's kind of like the training wheels towards value pricing, then let me know and I will share that resource with you. I look forward to hearing from you. Let me know what resonated with you, what your takeaway is, how this affirms something that you're doing, and the difference it is going to make for your firm. Lauren Fogelman, showing accounting professionals how to double their income, working half the time. Take care.